All right, we're currently looking at a trade that we're managing on the CAD-JPY for our trade signal service. Larger pattern X, A, B, C, D, and we took a trade entry. And now I'm going to break this down to a 15-minute chart and show you what we're looking at. All right, we had the waves down, which lasted into a 5-wave on in Elliott terms. And what we have so far is an impulse off the low, and that gives us that larger term 0 to 1, and then we had a retracement of 1 to 2, and now we're making that 2 to 3 wave, which is typically the largest wave in an Elliott. Okay, but the segment of that 2 to 3 wave typically will come in also with a 5 wave. So we have a 0, 1, 2, 3, 4 coming up on the 5th. Our risk at this point is at 93.50. We entered down here at the 93.8 area, right in here. We entered long, and now we're getting that 5th wave push up. So this is indicating if there puts in a lower high, what they call a truncated 5, which means it doesn't make a full 5. Or if it makes a new high, we're going to raise our stop up accordingly. But what you have to look at when you're working on these larger patterns is I love putting trend lines. Oops. Can we get rid of this trend line? I like looking at putting trend lines across where the market puts in its support. So we have one here, right? And that's going to be important going forward when the market eventually does have a pullback. The second one will be here from this low to this low right here. Eventually we'll get a pullback, and that's going to mean something for us. And right now we have that sharp rally up. We don't want it to come back and start breaking down this trend line. So you're looking for this to come up. So that's how we manage, or how to manage a trade when you're dealing in the Elliott level, right? You can always let this fill its way back up. This is a 38% retracement of the largest swing up, typically a first target. It just happens to be coming in at a nice zone. What we're going to do is going to raise the risk to 93.515. So the risk is raised, and you heard that pop, to 93.515. So right in here, basically. And we're looking for this to push up a little bit further. So you don't want to just cut off the trade. You want to let it play itself out, but keep your risk and managing it from below. Hope you enjoy the thoughts on managing a trade.